These are actually part of your personal tax returns. There's a separate schedule on the personal tax returns called the T2125.
I can see the whole wide world with these two eyes, and I can be whoever I wanna be, 'cause it's my life.
Hi, thanks for joining us for another episode of Ask Spurrell CPA. Today we're talking about the annual June 15th proprietorship filing deadline. I have Trevor here with me again.
Hi there.
Trevor, how was your Easter?
It was really nice.
Yeah?
I had some time with the family and a couple days to relax and get focused again.
Excellent, excellent. So the quote that we have here today, we're talking about the annual June 15th proprietor filing deadline. It's Gary Vaynerchuk quote. It says, even if your ambitions are huge, start slow, start small, build gradually, and build smart. So I think that's important when we're talking about proprietorships. You know, Industry Canada tells us that 50% of all Canadian small businesses fail. And they fail within 5 years. And 29% of those entrepreneurs who fail, they're going to report running out of cash as one of the reasons for failure.
Yeah.
And so the story that we have, you know, business owners, that they're a little bit uncertain about their idea. They start a side business, they run it as a proprietorship. However, they're uncertain of, how and when that information it needs to actually be reported. So Trevor, what are the questions that these business owners that are starting their side hustle, what do they need to ask?
Well, I think one of the first questions to ask is, what is the difference between a proprietorship and a corporation?
So a proprietorship is basically an unincorporated business, whereas a corporation is a separate legal entity.
Okay.
So it's almost a separate person for tax purposes than the business owner itself. But a proprietorship, it's basically tied to you and your personal tax obligations.
Okay. So should business owners strongly consider the benefits of limited liability?
Yeah, 100%. They should, before you go down the proprietorship route, you really have to consider the benefits of limited liability. So, in other words, can you get sued personally for this side business, this side hustle, which can be a big thing? Do you want to put your house on the line, your car on the line, your savings on the line when you're doing this side business? So even though, a lot of people don't want to incorporate because of cost, sometimes they have to look at, what is the potential downside from not incorporating.
Yeah, huge. So are proprietors normally tax efficient with more than $50,000 in income?
Normally, even if we strip out all of the secondary benefits of incorporation, and we look at the person doesn't care about limited liability, they think it's not very risky what they're doing, or they don't have a lot of assets to protect anyways, or they're not worried about protecting a trade name and the other secondary benefits that go along with incorporation. And we just look at it from a tax perspective. We just look at it, and this person has $50,000 worth of income. Normally, that person is paying more additional tax than they would pay in additional fees to incorporate. So really, it's generally not tax efficient. Now, this can vary from situation to situation, but for the most part, that's a good general rule of thumb. At $50,000 in net income, generally you're actually spending more money to not be incorporated.
Wow. Most people probably don't know that.
Yes.
Yeah. So, question, are the tax filings for proprietorships done with your personal tax return?
They are. So your tax filings for an unincorporated business or proprietorship, means the same thing. These are actually part of your personal tax returns. There's a separate schedule on the personal tax returns called the T2125. And it's basically an additional schedule that goes with your personal tax return that goes through the business activity, the revenue, and the different expenses that go along with the business.
Okay. So do unincorporated business owners have the same tax deadline as everyone else?
They have a different tax filing deadline. So most everyone in Canada has an April 30th filing deadline to file their personal taxes. If you have unincorporated business income, proprietorship business income, you actually have a June 15th filing deadline. Okay. So you effectively get another month and a half. The government recognizes that your tax return is a little bit more onerous and a little bit more work involved. And so they give you basically an extra 45 days. So instead of having to file on April 30th each year, you and your spouse, even if the spouse isn't involved in the business, is required to file by June 15th instead of April 30th. But it should be noted that even though you're not required to file by June 15th, if you owe money, they're still going to start charging you interest. The interest is at a reasonable rate. It's not a penalty. You don't get a penalty as long as you file by June 15th. The penalties are what can normally be significant. But yeah, filing deadline June 15th.
Okay. So next question is, do you need accounting software to operate as a sole proprietor?
No, often you don't. A lot of solopreneurs start, they get sucked into this trap and they think they need this. I'm running a business and so I better spend, 30 hours a week on my accounting. No, that's not what's involved here. It can be as simple as tracking different categories. So you want to know what you had as total revenue, and then you want to know what your different categories of expense are. Maybe advertising, maybe travel, maybe meals and entertainment, maybe the supplies. But yeah, you don't necessarily need a double entry accounting system to operate, especially as a small proprietorship. It's a little bit overkill in most situations.
Okay. So should you visit an accountant to find out what categories to track?
Yeah. It can be as simple as, just identifying what those categories that you need to track. What are the totals we're going to need to provide at the end of the year? And the accountant can normally, find out about what's going on in your business. What are the operations? What are your sources of revenue in this business? What are the main expenses of the business? And at a high level, what do these projections look like for the business? And then the accountant can, literally when we have clients that come into our office in that situation, we'll go through the T2125 with them and figure out which categories are relevant to them and which categories are not relevant to them. And we'll basically say, you need to track totals for this category, that category, and this category. And these categories you don't necessarily need to worry about. And sometimes the business owners need to, have it explained to them of what the categories actually mean. Dues and subscriptions, might mean to them their software license that they have. So it's a good idea to go through it with an accountant. It's an exercise that we've done in an hour or two, and you'll have a good idea of what categories you need to track and which ones you don't.
Okay, so what is the difference between single entry and double entry accounting?
So when you get double entry accounting, that's the conventional, by QuickBooks accounting software.
Okay.
And what double entry accounting means is for every debit, there's a credit. And so let's take this for example of if you earn revenue. So if you earn revenue, you have a debit in that money goes into the bank account. And then you have a credit, which is just revenue. Okay. So for every debit, there's a credit. So for every action, there's an equal and opposite reaction, if you will, if you're a physicist, I guess. It's the same thing with an expense. If we have an expense, somewhere along the line, we should see money coming out of a bank account or being charged to a credit card. So that's double entry accounting. For every transaction, there's actually 2 entries made in the accounting records. Single entry accounting is generally the threshold for proprietorship, and it's simply just a total. So we're just totaling expenses. We're not verifying those expenses against a credit card transaction or a bank transaction. So it's a little bit different. Obviously, single entry accounting is a little bit less work. We're only verifying a simple total. But single entry accounting is inherently a little bit more risky because an error can be made in making those totals, whereas double entry accounting, it's difficult to make those errors because if you make the error, if you report the expense incorrectly, your bank balance won't match at the end. So double entry accounting is usually the standard for corporate accounting, but for proprietorships, again, it can be overkill. Single entry accounting and providing simple totals can be all that we need.
Okay, so is it still a good idea to have a separate business bank account?
Yes, it's still a good idea to have a separate business bank account. Whether you're incorporated or not, it provides an added level of assurance, and it makes it easy to go through the income and expenses at the end of the year. So sometimes it's just the ease of reporting and reviewing what happened. If you know all the income got deposited in one account and all the expenses were paid from one account and one credit card, it's very easy to go through at the end, especially if you get behind on doing any totals. It also provides a layer of audit protection. Certainly not an audit guarantee, but it does, reduce your audit risk because it speaks to the intent of the transaction. So if all of your expenses are coming out of your personal account, both, when you go out to eat with your family and when you go out to dinner with a business associate, it can be difficult for, to establish the intent of that transaction. An auditor can look at this and say, well, why should I believe that this expense had a business purpose?
Right.
But if you have two clear accounts, it speaks to, you had a clear intent. And if you're maintaining those two accounts, there's less argument for the auditor to have that the expenses didn't have a business intent. So it is a good idea to maintain a separate account. It's a minimal cost in terms of how much it's going to cost you an extra $5 or $10 a month in service fees. You still have to maintain the receipts and the invoices either way to support the expenses. But having that separate business bank account, separate business credit card, it's the best practice for sure.
Okay. So why is it still a good idea to have an accountant help you file for your proprietorship?
So it's still a good idea to have an accountant look at it, even though we're talking about single entry accounting, because your accountant is going to have some input on, first of all, are the expenses that you're reporting, are they even reasonable?
Right.
Do they fit the parameters of what's allowed, what's not allowed, what CRA is going to consider? And they might even find some things where, are you sure this expense is zero? Or there'd be areas where, given the nature of your business, that it would be expected that there would be an expense in this category. Where a lot of business owners come in and they don't have one. So it's not just being too aggressive. It's actually, missing expenses and legitimate deductions as well.
Right.
That the accountant can pick out. It can also just be a classification thing. Sometimes business owners will trigger an audit, not because they report an illegitimate expense, but because they classify the expense in an account that would appear that it was illegitimate. If you threw all of your auto expenses into the travel category,
right,
or all the supplies for the business, they're sitting in office supplies, things like that can trigger an unnecessary audit, an unnecessary amount of work, and then it brings into scrutiny all of the items that might have been gray area items to begin with.
Right.
So it's still a good idea to hire an accountant. Obviously there's no guarantee whether you hire an accountant or not if there's going to be an audit, but you're doing everything you can to minimize your risk.
Okay.
So I think that's what we have here today on the annual June 15th proprietorship filing deadlines. As always, if you could hit the like and subscribe button so we can continue to deliver you tips on how to beat the odds at business, and please leave us some comments in the queries below so we can address them and potentially use them for topics from future videos. Thanks very much.